Nvidia's rise over the past few years has been one of the most dramatic stories in corporate finance. What was once a specialist graphics chipmaker has transformed into the central engine of the global artificial intelligence economy. But how did this happen, and what does Nvidia's performance tell us about the future of tech? Let's start with the numbers. In its most recent fiscal quarter, Q4 2025, Nvidia reported $13.5 billion in total revenue, with $11 billion coming from its data center business, reflecting a year-over-year growth of roughly 50 to 60%. These figures beat expectations and showed that Nvidia's chips remain in extraordinarily strong demand across AI workloads. Globally, Nvidia's growth has been staggering. In 2025, total revenue was approximately $130.5 billion, more than double the year before, and its annual growth rates in recent years have outpaced nearly every major tech company. The semiconductor revenue data also shows Nvidia capturing about 15.6% of the total global chip market, making it the largest pure semiconductor seller. So why has Nvidia grown so fast? The answer is demand for AI infrastructure. Nvidia's GPUs, especially the Blackwell architecture, are the backbone of many large-scale AI systems, from training generative models to running inference in data centers. According to recent reports, Nvidia said it's selling as many AI server chips as it can produce, and that demand remains off the charts. That has translated into spectacular profitability. Nvidia's gross margins remain among the highest in the semiconductor industry, and its net income has surged recently as well. For example, annual net income for 2025 was roughly $73 billion, a more than 100% increase from the prior year, revealing how strongly the company is converting revenue into profit. Part of this is geographic and ecosystem expansion. Nvidia has made major strategic investments, including a recent $2 billion stake in CoreWeave, a major AI cloud infrastructure provider, strengthening its hold on data center build-outs for AI workloads well into the next decade. But it's not just about selling chips. Nvidia has built an ecosystem that includes partnerships with cloud providers, AI developers, and enterprise customers worldwide, creating what many analysts call a network effect in AI hardware. This means the more companies use Nvidia GPUs for AI, the more entrenched its platform becomes, making it harder for competitors to catch up quickly. The stock market has rewarded Nvidia accordingly. During 2025, Nvidia's stock soared almost 39%, and at times the company's market capitalization briefly exceeded $5 trillion, making it one of the most valuable companies ever. However, strong performance doesn't mean smooth sailing. Valuation multiples remain high, and some risk exists if broader economic conditions change or if supply constraints ease and competitors mount pressure. Looking ahead, forecasts suggest that Nvidia's earnings and revenue could continue growing at 20 to 30% annual rates, supported by acceleration in AI adoption, expanding cloud spending, and new product cycles. Analysts also point out that continued growth hinges on global adoption of Nvidia's platforms in China, Europe, and other major markets, areas that face regulatory and geopolitical complexities. To sum it up, Nvidia's remarkable growth this decade has been driven by its early and sustained focus on AI computing, enormous demand for GPUs in data centers, and strategic positioning in long-term infrastructure. Record revenues, expanding data center dominance, and major strategic investments put Nvidia at the very center of the AI economy. But as with all rapid success stories, the next phase of Nvidia's trajectory will depend on execution across multiple fronts: supply chain resilience, competition from other silicon makers, and global market access. If this explanation helped you understand why Nvidia is dominating the AI era, follow Real Business Today for daily insights into tech, markets, and how money really moves behind the headlines.